We must rely on teaching correct principles. So what are the correct principles of investing? So we've taught this class for 25 years. This is what we've come up with. There may be some other ones. Number one, know yourself. What are your visions and goals? What do you want to accomplish? Why are you investing? Know your budget. Live within your means. The reason you do a budget is not just so you can record your expenses. You do a budget so you can save. Know your ability to tolerate risk. What kind of an investor are you? We'll actually do a risk tolerance test on Friday. And we'll do that, and so you'll be able to see what kind of an investor you are. And then know what you control. We really encourage you to develop a sleep well portfolio so you can go to bed and you don't worry about it.
Here's this. Sorry.
And then watch over confidence. Hey, who do you think trades more, men or women? Men. Who do you think has the higher return?
Women.
Women. Who do you think trades more, single men or single women?
Single men.
And who do you think has the higher return, single men or single women?
Single women.
Single women. Well, what do you think? Who do you think does better? Someone who, well, here's the question. Before online trading, do you think people beat the benchmark or not? Before they had computers and you could push a button and send your order to the stock, do you think they beat it or not? They beat it by 1.9%. After online trading, do you think most people beat it? Actually, they didn't.
So the more you trade, the more you lose.
Yeah. So again, we need to understand. We need to understand ourselves. When we managed assets, we made sure we put our limit orders in once a week, not once a day. We watched it over time. But I'm reminded of the Pogo. He's a cartoon illustration. It says, "We have seen the enemy, and he is us." So often we're our worst enemy for investing. Number two, seek, receive, and act on the Spirit's guidance. I like that. Perform beyond our natural abilities. I was not one of the sharper knives in the block or sharper students. But my patriarchal blessing admonished me to get a doctorate. When I went back there, my dad gave me a father's blessing. And he said, in that blessing, he said, "I promise you that if you'll do the things you should, I bless you that you'll be able to work beyond your natural abilities." And I thought, that's so cool. God gives us our natural abilities. Can't he help us to work beyond those? And we received that blessing.
Mm-hmm. Definitely.
Number three, understand risk. Lots of different types of risk. Inflation, business, interest rate, financial. But you need to invest at a risk level that you're comfortable. If the market goes down 1%, you jump, then you know what? Maybe that's not a risk level you're comfortable with. But find that risk level. And what we'll do in this class on Friday, we'll take a risk tolerance test that we've put together to help you understand what type of risk.
And you'll be including that in your investment plan.
Yeah, you include that in your investment plan. Stay diversified. You need to have a diversified portfolio. I know some people just like to put, right now the flavor of the month is crypto. Let's put it all in crypto. And then next month they'll sell it all and they'll go back whatever the next flavor of the month is. But that's not the key to a long-term performance. You want to understand the risk of each and every asset class you invest in. We like diversified index funds just because they're low cost and you'll get the benchmark. You'll get the return of whatever the benchmark you're seeking out there. And then minimize costs. Markets are unpredictable. Costs are forever. So again, we like lower cost mutual and index funds, which tend to perform better. So no load mutual funds means there's no sales charge to buy and no sales charge to sell. And if you've got low management fees, then it's just really cheap.
So we had a niece and a nephew that they were paying like 5% or something.
Like that, right? So
every time they put money in, the broker charged them 5%.
Right. So that's
right off the top, before he even made any money for them.
Is it hard to get ahead when you're paying 5% of every dollar you make?
So we were like, you guys need to stop giving him money and do something else.
And then you also need to use wisely use retirement vehicles that are available in your country. So we have things like Roth vehicles where you pay taxes now, but when you take it out at retirement, you don't have to pay any taxes. Or traditional vehicles where you get a tax break now, but when you take it out at retirement, you don't. You have to pay taxes on it then. Okay, you want to invest long-term and disciplined. Avoid short-term trading. It's interesting, I see a lot of day traders. And day traders work well when the markets are going up, but you know what? You don't see them very much when the markets are going down. The other thing too is realize if you hold a stock and you sell it within 365 days, you have to pay the highest taxes on your capital gains. It's basically ordinary income. But if you hold it 366 days, all of a sudden that you get a preferential tax rate because the government's trying to encourage you to invest long term.
But the bottom line is that it's important to invest long term because there's no get-rich-quick schemes that really work.
Yeah.
There really isn't.
I've worked in the industry. I've known things. There's some people that actually do a better job than others, but there's nothing that you can pay someone else that's going to make sure that all of your investments work out.
So we're teaching you ways that it's low cost and that you will do better than if you invest it with somebody else.
Yeah. Again, what you want to do, you want to follow correct principles. Okay, this is kind of an interesting chart. And you can see this was the return over this time period. And this was in 2000. 95 to 2000, the returns were really good. But this chart tells you two things. This is your gross return. This is the return without taking into account transaction costs. This is the net return, and this is the turnover. So the turnover is how much you buy and how much you sell. To calculate turnover, it's your buys plus your sales divided by 2, divided by the value of the portfolio.
The less turnover, the more you're going to make. Because this person lost 18.5%, but this person...
No, their return was 18.5. So if you take 0.2 times 12, their turnover was about 2.5%.
Oh, yeah, that's right.
On average, they held this about 40 years.
The more they sold and bought and sold, the less they made.
Yeah. And this doesn't take into account taxes. Because if you're doing turnovers 21.5% times 12, so that's 240 times. So your turnover almost monthly. So your after-tax return, instead of 11.4, you're probably around 6 or 7%. Because all of your gains are short-term capital gains.
Anyway, the more you trade,
again, we don't recommend trading. We recommend you get a good asset allocation and you hold it for 40 years.
That's the plan.
That's how boring we are. Okay. If you must invest in individual stocks and bonds, know what you're investing in. I hear people say, well, I'm going to go invest in NVIDIA or I'm going to invest in Apple or things like that. I'm impressed that they'll just go read a company report and then they'll go buy it. Last semester, we taught an internship class. We taught students, how do you analyze companies? And they actually spent an entire semester analyzing one company. So if you realize we met 28 times, and then plus 2 hours outside, so they spent almost 60 hours analyzing one company. So if you only have 3 companies or 5 or 10 companies in the portfolio, do you need to do a lot of research? Yeah. Of course, what happens if you buy an index fund that has 2,000 stocks in it? The largest stock represents 2% of your portfolio. How much work do you need to know? All you need to know is that fund gives you exposure to that asset class.
And it's also an index fund will automatically meet the benchmark.
Yeah, with an index fund, there's just a much greater chance you're going to at least match the benchmark.
So you can tell we like index funds.
Yeah, we like, and why do we like them? Because they're low cost, they're tax efficient. Monitor performance. Again, you don't know how you're doing unless you compare your performance to benchmarks. I had a good friend. I said, well, how'd you do last year on your investments? He said, oh, you did fine. I go, well, what do you mean you did fine? Well, yeah, my broker says I did fine. Well, what asset classes were you in? Well, I don't know. How did the asset classes do last semester? I don't know. But my broker said I did fine, so I must have done fine. So realize, I like this quote from President Monson, that you need to compare performance versus benchmarks. Go ahead.
When performance is measured, performance improves. When performance is measured and reported, the rate of improvement accelerates.
What was he talking about? He was actually talking about ministry. But it works for investing too. So as you start your investment plan, make sure you know what asset classes you're in. Make sure you know what the benchmarks are so you can compare performance. And that way you'll be able to say, you got a 16% return, you'll be able to say, yeah, hey, I did well because I was in bonds and they were only up 4%. Or I was in international and they were up 10%. So make sure you understand the performance versus benchmarks. Principle 9, only high quality licensed and reputable people and institutions. Don't be afraid to get good help, but understand how that help is compensated. I actually like fee-only financial planners because there's no commitment there. I had a student at the beginning of the class, he came and said, hey, can I talk to you after class? And as soon as that bell rang on the class, I saw a young lady walk in and I thought, okay, now I understand. And so he had a question, he and his wife. They had heard that one of the people in their ward, he was investing money, and he was using options and futures. And he told me, yeah, I'd done really well. I did, and he told them, and they said, well, would you like to invest some money for us? And he said, sure. And for the first couple of weeks, first couple of months, he did well. And the market turned and he basically lost it all. And they came to us and says, well, what can we do? And we just said, you know what, he's not licensed. I mean, you can do that, but you need to work with good people that are licensed and make sure you know how they're compensated. You know what? If you work with this broker, do they charge a sales load on every mutual fund that you buy? If they do, then not only do you have to worry about the management fee for the fund, but you have to worry about their sales charge too. And is it a front-end load? Is it a back-end load? Is it a deferred load? You need to understand how you're being charged because you get to choose your expenses. And then develop a good investment plan consistent with your vision, goals, and budget, and then follow it. Again, your investment plan is your roadmap to success. And markets are volatile. They'll go up and they'll go down. But if you have a good investment plan, you know your risk tolerance, then when things are tough, you can say, hey, I understand what's going on.
And make sure you think celestial. Okay? And why should I follow good principles when investing?
Okay. So let's
really
kind of
have
summarize. Why are principles important when investing? Do you think that's what most people are doing, Caleb?
I think because if you don't have principles, you're basically just gambling.
Yeah, pretty much.
So you want to take it from a gambling situation to really long-term investing. Mm-hmm. And we're not just gambling. We actually can talk about what's the difference between gambling and investing. But we don't want to make this a gambling thing. We want to make it a long-term thing. So when you get to be old geezers like me, you can just walk away, you can smile because you have the resources you need to do what you want. And if you follow principles, it makes all the difference in the world. And again, there's a lot to be said. We got to rely on teaching and following correct principles.
So if you have an investment plan and you start investing as soon as you graduate from college, in 40 years, you're going to have a good little nest egg that will launch you into retirement for the rest of your life.
Yeah.
Okay.
What are our takeaways?
Okay, so keeping divine commandments brings blessings every time, and breaking divine commandments brings a loss of blessings every single time. God will not be mocked. We need to keep the commandments, do the things we should.